Hey Jeff, thank you for giving time and
Absolutely. Great to be with you.
making that tremendous useful contribution to Tesla community. And I think today discussion is going to be very interesting because it's going to be I'm going to hear somebody who's kind of spent so much of time in supply chain, has a significant experience with BYD, and consults with a lot of these mega companies on various supply chain issues. So I think thank you for the time. It's pretty valuable. Really appreciate it. I just want to know, everybody's a history. I think Tesla is a bit of a cult stock. And I think cult is not a bad thing as people make out to be. And there are people either with him or against him. And there are a lot of people with him. Why are you with him? And how did it started for you?
Yeah, I mean it's actually pretty fundamental based. It's not just raw believing one thing or another. I started looking at the company back in, 2011, 2012, and actually just, working in supply chain, working in the Bay Area, and I actually saw a couple of, Teslas drive by very early on, first Model S's. Like, wow, that car just makes no noise. It's beautiful. It's amazing. And I wanted to learn more, and through some mutual contacts, we're always kind of talking with each other in the industry. And then I was able to get a tour of the Fremont factory by one of the heads of supply chain, and walk through it. And actually, it was funny. We actually had a common issue with a common supplier, where they asked for some help, where we had, years of history with it. And so it kind of intrigued me. But I honestly test drove the car, probably the Model S, I would say first quarter of 2013. And then I think I test drove it on a Saturday. I bought it the same day. I put my order in. And then Monday I started, investing in the company, because as I drove the vehicle, there was nothing that drove like that. And I had other, pretty nice gas powered vehicles, and like just nothing accelerated like it, nothing handled like it, with the battery, low center of gravity. I'm like, this is something special. And then from there, I really started getting interested in the company, founder led, multiple founders, JB Straubel, and Elon at the time, and just very intrigued with the challenge in front of them, which is like, if you're going to scale EV, you have to build up all these elements over time, whether it's the battery modules, the charging network, or so forth. So became kind of like a supply chain puzzle in my mind. So I liked the product, I liked the vision of the company, and I started investing there very early on.
And how's the journey been? Are you equally bullish even now? Do you get fascinated equally now, or is it gone down, gone up? What is it? Where are you with your emotions and your rationality,
Yeah, I mean, I didn't have like I would say when I first started investing, I was in the throes of, scaling Android and supply chain, and, to literally billions of units a year, that whole product line. And we were kind of a corner or core part of that. So I was very busy with that. I didn't have the chance to follow everything every day. But over the last couple of years, it's been a very intriguing story because it's become very dynamic. Once they scaled, once they scaled the Model 3 and Model Y, lineup, and then they scaled their, started scaling their joint venture with batteries. They scaled their supercharger network, and it became just really interesting for me to kind of study and follow along, because there's just lots of elements of supply chain behind all of this, and product engineering, and all that's very interesting to me. And I follow the product. I've owned Teslas ever since I bought the first one. Haven't bought another car for myself to drive. I've just been, driving Teslas exclusively because they perform better than any other vehicle I think I can buy for the dollar. So yeah, I've been following it more closely of late, and the story just continues to become more intriguing and more exciting.
Yeah. Now, what is your view? How was your earning call? What did you take away? And from the earning call, people are calling it the best earning call by Elon. And I told you my view that he was just being smart. There wasn't anything new for me except that he's bringing forward Model 2 production. But principally, it looks.
Well, yeah, I mean, they answered questions about the short term. the medium term and the long term all in that call. And normally they don't get into product level discussions on earnings calls, but I think he needed to kind of articulate how do we get from where we are today to a robotaxi future without having to reveal every single detail. But he revealed enough, like, there was literally there was a page in the earnings deck of a ride hailing app. There's a page in the app, or sorry, there's a page in the deck regarding their ramp up of compute. I mean, they're going to have 500% more compute this year than they had the prior year. It's amazing. So I think he needed to chronicle and kind of lay out the framework for how they, how they become, an autonomy AI driven company. And he also answered some of the short-term questions of like, why was there a unit shortfall in Q1? Well, there's a lot of stranded inventory. I've talked about this a couple of different times, and this happens with companies at various times. I'm not saying there's not pockets of demand issues. There probably are too, but there was, you could, tag anywhere from 40 to 70,000 units of just stranded supply timing issues with the Red Sea attacks, with Berlin, and then of course the ramp up of the Model 3 in the US. So kind of went through the short term, kind of even went through the next quarter. So the next quarter is gonna be better than this quarter. And then he said, hey, we're going to release some vehicles a little bit, between where we are today and this compact unbox process. And we're going to pull forward some of the modules out of that process. And we're going to release lower cost vehicles before we get to the 25K vehicle. So I didn't hear that they're pulling the 25K vehicle forward. What I heard is they're pulling elements of it forward, and they can probably put it in something like the 3 and Y to take their cost structures down. So there was a lot on that call. It answered a lot of the questions. I think the institutions were worried that Tesla was just going to, get out of normal conventional driver-led cars
Yeah.
into just nothing but robotaxi. And I think they articulated not only that, they said like, hey, we think we want to step this up to 3 million units in, a year from now. So very audacious undertaking.
The financials sucked, right? I mean, if you look at just Q4 financials, I mean, they were like
Q1,
pretty,
yeah.
yeah. And did you think about it? Where was it aligned with your expectations? And, you know,
Yeah, I mean, there's a unit miss, so that's going to drive. So and you had stranded inventory, so that's going to eat up cash when you have that situation. So a lot of things to me were explicable, but the results weren't good. Like they missed the top line, they missed the bottom line. I would say gross margins were a little bit of a pleasant surprise. I thought they were going to be much worse.
okay.
Um, but it's clear to me like the balance sheet inventory and the finished goods inventory, were, detriment to the cash position, as well as just the spend and ramping up compute. So, yes, the results were below expectations. So I think the challenge for Tesla, one of the things they really, they don't normally guide. They don't guide on EPS and revenue going forward. But I mean, there is a question of like, well, what will Q2 look like? What will Q3, what will Q4 look like? The only thing I will tell you is these OpEx reductions that they've done in almost, I think, all the factories and several of the design centers and sales offices, that's going to take a lot of their cost structure down. I mean, it could be north of 1.5 or $2 billion. So the run rate of the company after June, after these people are off, unfortunately, again, for these people, I'm sorry for them, but once they're off the payroll, Tesla could potentially, if they get their units right and get things moving in the right direction on units, coupled with this OpEx reduction, you could see a pretty sizable move in margins back in the positive direction.
And so what is a bull thesis is kind of intact, or is it gain momentum, or is it, sorry, I'm talking like a bit of a mainstream media now.
Yeah. I mean, the bull thesis is the company's focused on autonomy. They're ramping up their compute. And at the same time, though, they're focused still on making a high volume and being the number one, leader in conventional EV production. And it looks like they've gotten fit from an OpEx perspective and done some cuts, including deprecating some capacity in the factories. So that's actually going to help with the COGS structure in the factories as well. So it's not only the labor efficiency side, but they probably have done some work on rearranging the capital picture in the factory too. Again, I'm surmising this, but I mean, this is kind of what I'm kind of piecing together things I see
Yeah.
in the media reports. So the cost pitch, you say the bull thesis, if they can start getting gross margins going in the right direction, what is that going to do? That's going to help with EPS. EPS has been sick. It's been going down,
Mm.
sequentially for several quarters in a row. So if they can stabilize pricing, but really drive some more significant COGS declines, you could see, this thing gets really nutty as soon as gross margins start getting over 20% again. And and I could see them getting there unless there's some major surprise on the MSRP side. By the way, when you look at the MSRPs, there's a big difference, and I explained this on a couple shows, between MSRP and ASP. And I
Yeah.
think what people are getting confused on is, in the lines of unit economics, Tesla has been doing some minor adjustments on MSRP, but what they just did is they took all the stuff between MSRP and ASP and they took it out. These inventory reductions, these insurance reductions, these delivery spiffs, they took a lot of this stuff out. And when you actually look at what they've done, they've actually stabilized pricing over the last, call it 12 months, from I should say last May. They did this big price correction last year, January to April. That was a COVID correction. That was okay, the input prices are coming down, and we can take, because we had to ramp all their MSRPs up during COVID because of the input cost going up, and so now they can take all that off. So I called January to April last year price correction after COVID. Everything they've done from May to now has been pretty closely aligned, maybe plus or minus 1.5% with their COGS reduction, cost of goods sold.
But uh, were you equally upset like a lot of Wall Street guys, or let's say, for example, like a better word, Gary, on price cuts, and even I think Omar, was upset about the price cuts, and Elon himself kind of talked about how he needs to match the prices to the production. For me, look, it really didn't matter because I kind of think that he knows better than me. You know, what are your views on? Are you kind of on price cuts, or you have a different view?
Well, Tesla has better information than all of us, right, on the outside. And if you look at it philosophically, you had to do the corrections post COVID, or you're out of bounds in terms of like what people are willing to pay for things. One, and two, again, if you look at the Tesla mission, they're trying to accelerate, sustainable transport. You're not going to do that. You're not going to sell Model 3s and Model Ys in the US. And I'm going through US pricing, not Southeast Asia pricing. But in the US, it would be outrageous for these vehicles to be between $55,000 and $80,000 like they were during COVID. It would be outrageous. Nobody would, they wouldn't sell well. So as those input prices came down, think of aluminum, think of stainless, think of copper, think of, even the battery modules. Remember, all the other
Component.
especially the legacy EV manufacturers, put these big orders on Cattle, put these big orders on LG, put these big orders on Samsung, and then they pulled it all back. And so these guys are left with all this excess capacity. Tesla comes in and says, "We'll take some." Tesla pulls back a little bit on their 4680, which quite frankly has had some issues. It's,
Yeah.
to be totally transparent, it's not meeting the energy density targets, it's not meeting the supply targets and so
Also the
forth.
timelines, I
But
guess.
hey, there's all this stuff on the outside that they can get
Hmm.
cheaper, basically. So to say, so anyway, just back to your question, we don't know better than Tesla, but to me, as long as they're meeting the moment in terms of taking their COGS down and taking their price down together, I don't have a problem with it. I think as long as they kind of have a path over 20 points of gross margin, and they can keep operating margins pretty healthy so they can invest in compute, I think that's all that matters. So I think this was a bad quarter for cash overall. I think they're going to spring back a bit in Q2, get stronger in Q3, and then they're going to have these new product ramps, probably, Q4, Q1 of next year. And so that should be good. And the other thing is, people have to keep in mind, Tesla has two new products, the Model 3 and the Cybertruck. And those products have unconstrained demand all over North America. you know, if Tesla could ship 50,000 more Cybertrucks this quarter, they would be sold. If Tesla could ship 50,000 Model 3s this quarter, they would be sold. That's what they normally sell at. So there's definitely, Tesla's got really good products that people want to buy too. So, finally, just one other thing to answer your question about the bull thesis. Bull thesis. Tesla is a company that runs on speed. They have um, they have a very fast supply chain. They have very few days of inventory relative to the rest of other companies. Now, bumped up this past quarter, but they're going to take that down again. Everything runs on speed. So they're going to see the new input pricing faster. They're going to see everything faster than other companies. They're also going to see, because they don't have the dealer network and they don't have those nodes of inventory, they're going to see pricing pressure from the field faster. So I believe what Tesla's been doing is they've been reacting faster to what's happening in the macro market. So as we do recover and we do start cutting rates globally, they will recover and accelerate EV adoption faster than others, and them and the Chinese. They will they will gain a lot as soon as the macro piece recover. They'll come out of it faster than everyone.
Yeah, no, I kind of am on the same line. I mean, obviously, I didn't know, I couldn't have talked so much in detail, but for a change, do you want to know how much the Tesla cost in Singapore, Jeff? I think the
Yeah,
basic Tesla model will be easily 160, 170,000 Singapore dollar plus here,
yeah,
uh, which translates to like 120, 125K US. So
yeah,
it's totally out of reach for many people here, but
yeah.
cars in Singapore are expensive, but that's a different thing. So Jeff, going forward, future, what's your what's the, and I know this is again a bit of Wall Street language, and what's the key catalyst you think the company has to grow, right? I mean, the valuation is, I think, still, it's not a car company valuation, yeah, right? I mean, that would like 60,
Right.
$70, but what's the key catalyst you're thinking is how the company is going to grow into valuation and exceed the valuation maybe, or, the price
Yeah.
increases.
Well, I think what you're going to see is you're going to see Tesla monetizing all that compute that they bought, all that training compute faster than you actually see from the Microsofts and Metas and others of the world. Um, so they have a real world AI solution. So when you say like, what are the catalysts? Well, they have to continue growing that compute. They're probably going to 2.5x it this year, just from where they are today. And yeah, it'll probably be a 500% versus last year growth. So they got to grow compute. You say like, what are the catalysts? Well, they got to stabilize margins and start growing them back over 20%. They've got to get back to growth in terms of unit volume. And they definitely got to get north of, probably 1.8 or closer, to 2 million if they could this year, but definitely over last year. And then, what they've done with their capacity is they said, like, look, we have closer to 3 million units of capacity and we got to figure out how to fill this up. If you think about this company a year from now, next year, if they have these new models in production, if they have this capex they've taken offline, the labor efficiencies they've just improved with the reductions, and they have further COGS reductions in all the vehicles they're doing. They have a ramped up Cybertruck. They have a ramped up new Model 3. I mean, and then they're basically on the precipice of ramping the new unboxed compact robotaxi model probably a few quarters later. Next year's a pretty exciting year in terms of new product introductions and really the ability to scale EPS up again. I think they have to get a little bit more into that and show how they're going to do that. But I think the cost picture, the COGS picture gets pretty nutty when they get back to scale. 386,000 units isn't going to do it, but when they're back over 500,000 units in a quarter, after they've taken these reductions out, and after their COGS are continuing to come down. Their per unit, their per model COGS, it's different than aggregate COGS. Their per model COGS, ex Cybertruck, put that to the side, it's brand new, it's ramping, came down. In a down quarter on unit volume, their per unit COGS came down. So Tesla has some external forces helping them drive COGS down. One of them is all the new products in flight. If you get business with Tesla as a supplier, I mean, you're basically getting business on the highest volume EV products in the world. Remember, if you get BYD business, so Tesla's spreading that business over 4 to 5 models. BYD spreading that business over
In-
22 different models.
yeah,
It's a different paradigm.
yeah. No, look, I don't know a lot about US regulations and things like that, how it works, but it's definitely a society which is a little bit more risk-taking and open to things. That's one of the reasons why the country became so prosperous, the American dream people talked about. Do you buy into that robotaxi thesis of it's going to be so great as Elon talked on the conference call? Have you thought about it? Have you given some thoughts into it? And I haven't seen you so far so excited about the robotaxi though. I mean, I don't know whether you really are or you aren't. I don't know.
No, I am. I mean, when you ask me for, how does Tesla start, returning and recovering, I really wanted to focus on the fundamentals of the auto business. And really honestly, they have a huge advantage. I don't believe anybody in the world right now is doing pure EVs, definitely not in the US and Europe, pure EVs profitably. Maybe BYD is doing,
Yeah.
we're not sure. We know that
Final
across
purpose.
their whole product line,
Yeah.
they are getting profitable on auto. So I wanted to focus there. But yes, I am very bullish. I have the latest full self-driving software. I'm able to drive it here in the US, and it is like otherworldly. It's not anything you've ever been in before. And the key is Tesla probably has about $1,200 worth of hardware in the car to enable that. And if you look at conventional robo taxis, they're remanufactured. They're cars that have already been built, and then they're rebuilt to add all these sensors and lidars and cameras, and they could be tens of thousands of dollars more than their MSRP to do that, or even over $200,000 to do that. So when you think about robotaxi, Tesla has started and they do everything from a position of scale. Can this scale globally? Can this scale from a volume perspective? And will the unit economics, will the COGS structure, will it scale? And if you're building $200,000 vehicles as robotaxis, I'm not sure that is necessarily going to scale. And you're teleoperating these things behind a curtain, I'm not sure that that's going to scale. I think if you double click into the various robotaxi businesses around the world and you look at their economics, like we see, like GM reports out on Cruise here in the US, the economics are really bad. Even when they were running full scale in multiple cities, I mean, they're losing, they were actually accelerating losses, multiple billions of dollars per year. So when you say the word robotaxi to me, I think Tesla can scale globally. They don't need a geofence solution. They can scale units and they can scale it from an economics perspective better than anyone else. So I think they're in a position once they actually crack the code on the software and, as they ramp up this training compute, that's the plan. Then I don't think anybody, near term catches them. It's they're years probably ahead.
Well, have you I'm not sure do you do this kind of extensive numbers? Are you into doing this putting an Excel sheet and seeing, okay, these are the numbers I think trillions of dollars or millions of dollars or billions of dollars can come through robotaxis? Do you I mean kind of mathematically you think on those lines to get to a certain price target or something? Is that your way?
Yeah, I mean, I make models in my normal day business all the time for supply chain design and economics and so forth. But in terms of Tesla, I review models. I haven't built one recently, but I have looked at other various types of models, especially around inventory and so forth. But I do look at others and kind of what they're doing. But to be quite honest with you, I'm really focused on what Tesla's doing in terms of ramping their compute and the performance of the releases. To me, we've really got to get down to what's the scale and scope of a robotaxi to really figure out what the cost per mile is. I think when that robotaxi vehicle is released, it's not going to have an MSRP on it. It's going to have a cost per mile or cost per kilometer on it.
Oh, that's amazing. Now, look, I mean, just talking about the stock now, and there's no wrong or right here. You're an investor, I'm an investor. We want to make money, right? I mean, we support a mission. but we do want to make money. Now, do you kind of have a thinking on that? Let's say Kathy, we're talking about $2,000. Now, some of her stocks have been like, I don't know. I mean, I respect her views, but on Tesla, she's been right in past, but sometimes I think she's smoking something, you know, just my view. But are you on that 2000 wagon or $2,000
So
or
yeah, so I don't I so I come from a position where I respect everybody's got kind of a different, they have their own time horizon. Some people are trading the stock, some people are going to, have been in it for 10 years and want to be in it for 10 years more. There's some people that want to get out of it next year. I think everybody's coming from a different place. So when I realize that, it's hard for me, unless I'm a professional, financial analyst or like
yeah,
a
yeah.
your rating firm or bank, to
Mm.
give you like a 6 or 12 month price target. So, I mean, I think ARK actually does very good research. Um, and if you look at what she predicted back in 2018, 2019 for where Tesla should be in 2022, and she said it should be a $4,000 stock. She nailed it.
She nailed it.
So between that point and now, obviously there's been issues. But I like ARC's research. I like Barron. I think Barron does some pretty
Uh,
good research. They're
recently,
obviously both very bullish. Um, but I mean, here's the thing: if Tesla solves autonomy, and they're the only company that can make EVs at scale for a number of years, at profitably, which it looks like that's going to be the case, at least in the Western Hemisphere through 2030. There's no one's cracked the code. Um, they've got a pretty good runway in front of them.
and you've such so much of experience in kind of supply chain and engineering and EV versus hybrid. I think I'm kind of hearing some kind of companies roaring back on, going back on hybrid wagon. My point is that they want to talk about it because they've lost the EV race, and they want to protect their people, business, and it's understandable. Where are you on that?
Yeah, from a first principles perspective, EVs have multiple powertrains inside of a single vehicle. So hybrids have multiple powertrains inside of a vehicle. So I don't know how that can be efficient from a COGS perspective. If you needed to replace the fleet with hybrids and it became super, super cost competitive, like where does that, if you needed to make 1 billion hybrids, like to really start getting into the fleet, where does that go? It's not really first principles based. But if you're talking EV, you can see the cost per kilowatt hour and what it's doing on the battery module. This thing was a couple $100 per kilowatt hour, and there's a path to $50 and less here pretty soon. So I don't see that hybrids economically scale. I think they're expensive. I think what's happened, at least in the U.S. has allowed them to take on some incentives from our Green Energy Act,
Mm-hmm.
and it's unfortunate because these things have 7 kilowatt hour batteries. They go 25 or 30 miles maybe on a charge, and they're getting a $7,500 tax credit in the U.S., which is 20%, maybe 15 to 20% of the cost of the vehicle. Doesn't seem to make sense. But you're right. Um, a lot of the legacy automakers realize that they cannot make an EV under $40,000 profitably. Remember, as the structure gets smaller, the unit economics become more challenging because what people are willing to pay for these big Ford F-150 trucks versus what they're willing to pay for a small like Chevy Equinox or hatchback are two different things, and the economics become really tricky. So they've got the economics down on ICE, pure ICE vehicles. But what's going to happen is ICE hit its peak in internal combustion engines in about 2017. We've not made more ICE vehicles in a year, I believe, since 2017. So as that rolls off, those economics, those supply-based economics, those factory utilization economics are going to start kind of clouding, coming in and kind of weighing down the economics of ICE. And then there's just going to be a question of, well, you're doing hybrid, you're doing, full on EV. And I think full on EV is going to win. From a first principles perspective, it's, a single powertrain and a more simplified solution. We just have to work through these issues of charging infrastructure and getting it ramped up in other countries. By the way, EVs are only penetrated, I think, in under 30 countries. So there's a long way to go. You can buy a Toyota Corolla or Highlander in probably 125 countries, in the world, but you can't buy an EV yet because that all the infrastructure is not there. Um, so I think EVs are going to win out. I think hybrids are kind of a crutch right now.
But yeah, I get it. Now, I think I'll talk a little bit on robotics and humanoid robot, and we see like chat GPT moment, and Tesla has had its chat GPT moment. It's just that people don't talk about it so much because it's not as penetrated as OpenAI is. Like in Singapore, I can use OpenAI and feel, things have changed, but Tesla autonomous, I've not driven here. Now, how, what do you think? Because I think NVIDIA, Jensen Huang, I heard talking about humanoid robot. China is going big on them, and then there is a Tesla, and then Elon talking that humanoid robot is the thing. It's going to be bigger than all the Tesla businesses. Really, with this competition coming in?
Yeah, because the TAM is going to be much bigger than automobiles. So these things are going to cost or lease for, in the range of small automobiles today, maybe under $20,000. We'll see what the pricing looks like. Probably very high in the beginning, but then working it down to more of a small automobile. But the COGS will be much, much better. And I will say that there are going to be, first off, I think China will do well in manufacturing humanoid robots. But the devil's in the detail. It's really going to come down to the quality of the actuators and, the longevity and the performance. So you're going to see a lot of stuff kind of coming out the starting gate. But there's really only going to be a few winners, I think, emerging for a period of time. But the TAM is so large, it doesn't need to be a winner take all. But I do think if I look at the 9 robots that were on stage with Jensen, in NVIDIA during his conference, there wasn't Optimus from Tesla. I don't think any of those 9, quite frankly, scale. I think maybe one of them can figure out how to get the scale. I think that's going to be the big challenge is um, not only scaling them in unit volume, but doing it profitably. Like that's the hard thing to do. It's,
Yeah.
anybody can build a big factory and grind out a bunch of units, but are you doing it profitably? And I think Tesla's going to crack that code before anyone, and they're going to have the manufacturing footprint and know-how before anyone. They've been on this for a while. And it's not going to be a winner take all. But the other thing that they're going to have is as they solve FSD in the car, they're going to have that same FSD computer doing the inference inside of the bot. That's a Tesla chip. They don't have to buy it from NVIDIA. So they don't have to pay the 70% margin that the figure robot's going to pay, that the other robots are going to have to pay NVIDIA. So you have this sharing of margins between NVIDIA and these bot manufacturers. And if you're NVIDIA, like who's making the priorities in terms of functionality and capability and training and what, in Tesla, everything's vertically integrated and streamlined. There's a set of tasks, like this is how we're going to get Optimus into production, and everything from the base silicon layer, hardware design, software, everything's in-house. You don't have to go to anybody on the outside to get Optimus fully working. So I think of all the companies, Tesla is going to be pretty uniquely situated with their network infrastructure and Dojo, with their inference silicon inside of the bot, and then their software capability and their manufacturing capability. I can't think of a company that checks all those boxes that Tesla does.
And the autonomy, the data which they've collected, the huge data set, that might just help with the robotics. Is that?
No, I think there's going to be different data that they're going to have to capture, and that's a great question. Where's that going to come from? How is the training? What's the input for the training data for the bot? Are there going to be are they going to build headsets and have people emulating? Here's it's not clear, but that's one of the questions out there.
Yeah, because autonomy, I think if you look at Elon's, it's a vision he thought long ago. before everybody, and people laughed at it. So, and he knew that data advantage is the way to go, and we started collecting data. But in robotics, he started 2 years ago, and now other companies are starting. So I'm just thinking, what data advantage will he have there, or what data advantage Tesla will have, which they
Well,
had in.
he's going to have the training capacity, and none of these other companies. I mean, they're doing partnerships with Amazon or Nvidia, but I mean, he's going to have the training compute online. He's going to have, I think 85,000 H100 equivalents by the end of the year, and that's just going to continue scaling. And so, you know, he's going to have the ability to train pretty rapidly and in great volume. So, and again, they're going to have the manufacturing capability. They already have the factories to try these things out at. They don't have to go. They don't have to go to and do a deal with BMW or Mercedes. They can just do a deal with themselves. They can put them in Starlink factories. They can put them in Tesla factories. They can put them in SpaceX factories, and that's when the paradigm changes.
Yeah,
That's
yeah,
when, if you can start, the way I see this from my experience happening is, if you were to like hover above a factory, like at 5,000 feet, and look down, I think the bots are going to start at the very perimeters of the factory. And what's going on at the very perimeters of the factory? That's inbound material coming in. And what happens with inbound material? You have a warehouse, you have boxes, you have to take stuff out of boxes, you have to do some sorting, you have to do some material quality control checks on the inbound material, and then you got to get the material to the line. Right now, that's a very labor intensive process. So that's where I see the bots going first. And then the other part of the factory that's in the perimeter is final QA, final inspection, and there's also some distribution operations too, depending on what the company is shipping. Could be boxing up Starlinks and stacking them for on pallets. So I think it starts in the perimeter of the factory. They build that capability up. They replace labor, and they continue working their way into the center of the factory. And then you're going to have a lot of labor displacement. You're going to have a lot of issues that come from this, from a societal perspective, and companies and countries need to start thinking through that now.
yeah. Now, I think I just want to ask before we move into discussion on Tesla versus BYD, which is a very exciting discussion. Challenges for Tesla. What is the challenge? In my view, and I don't know, it's a leading question, so apologies for that. That people are getting it wrong. It's not Model 2, or it's not anything which is a risk for Tesla. The biggest risk for Tesla is upcoming voting on the compensation and the 25% voting rights, which Elon is talking about. Because if that falls through, I think it's lost, in my view. What is we like you kind of do you want to extrapolate it in your view or your thinking, how you're looking at it?
Yeah, the voting opens next week, and everybody that's listening to your show and they're a Tesla shareholder, they should go in and vote their shares. And they should also, if they have any, like, work with any major funds like BlackRock or whomever, they should write their fund managers and let them know their position on how they think they should vote their shares. And if you go to like Tesla Boomer Mama and her page on X, she has it pinned up to the top, and she's been doing a great job, along with Amy, kind of doing some work in the
Yeah,
background to kind of get the word out on this. So people need to vote their shares starting next week. I think, coming up on June 13th, I would like to think that most of the institutions would want to keep the person in charge of the company that 10x the company over the last 6 years.
yeah,
I think that would be ludicrous to think like you're going to vote his compensation package down and say the man had to work, essentially for no compensation over the last 6 years, when he 10x the company. Now, you can be upset and like, what happened since Twitter and this and that, and that's fine. I don't agree with everything and every decision that Tesla makes as a company. By the way, I'm not one of those people of like everything they do is right. That's not me. But if you look at the greater preponderance of like, where were you 6 years ago? Where was the company 6 years ago if you were an investor? And where are you now? You're in a much better place. So it's only fair that if you were part of that ride and you were invested in the company and your shares appreciated, that the person that was driving and leading it should be compensated for that work. And I think their board is going to get creative. Um, and, you know, if the vote happens or it doesn't happen, I don't think Elon is leaving. Tesla is the kind of center of a lot of the work that he does, and I think it's going to drive massive amounts of cash and value for him over the next decade. SpaceX is going to start ramping up too, but if you think of like potentially the trillions of dollars that are going to be involved to get to Mars and to be a multi-planetary type, civilization, something is going to have to fund that. So if you're going to fundamentally change how we do transport, and then you're going to fundamentally change labor, with bots, you are creating,
Different world.
you're creating that path to a multi-planetary society. And I think he's given himself options. He's got XAI. He's
Right.
building, other things outside
He
of,
has no problems, Jeff.
yeah,
He has so many things to cook and
yeah,
fry, and I think it's the Tesla
yeah,
which moves out.
yeah. I don't think, again, I don't think he's leaving Tesla. I think the voters are going to support his compensation package. Um, if you live in the US or you follow US politics, you can see that some of this may be politically driven, kind of going after his pay package. You can read the judge's ruling, you can make your own decision. You can probably go into the compensation approach for every other executive and put it under a fine-tooth comb. But at the end of the day, his compensation package, ex board members, I think was voted on by 3 of the 4 shareholders. The original compensation package. So for this judge to strike it down is actually quite annoying, and it's actually you know it's disconcerting that a single person can come in and change the will of many thousands of shareholders. So the shareholders will send a new message. It doesn't mean that it's over once they voted through. I think there'll be some other shenanigans happening, but I think Tesla has a plan. The board should have a plan to reinstate his compensation and to put him on a new plan that incentivizes him to do the next 10x move on the company.
Yeah. I think let's spend another 10 minutes, which we left, on talking about BYD versus Tesla. I know you huge knowledge in that regard. What is BYD's advantage over Tesla? I think let's talk about it, Jeff. Do they have any advantage over Tesla besides access to
Yeah,
China?
yeah. BYD is a founder-led company. Mr. Wang founded it, I think, in the mid to late 90s. He's also an engineer, and they're when you look at the companies, they've actually been in working on autos since I would say the mid 2000s. I remember being at a BYD facility and them taking me around in a car, and they have a components business. So they make components. They make, you know, they make components for smartphones and other devices. They are a supplier to many of the big smartphone and tablet vendors. And so they have a components business. Those components can be made for the vehicle as well. So they have this element of vertical integration. And of course they have a battery business. And that's a big chunk of the cost of a vehicle, whether it's, obviously for an EV, it's a big chunk of the cost. So when you say what advantages they have, um, I would say that they're fairly well vertically integrated, probably better than any company that Tesla competes with. By the way, they also sell batteries to Tesla. They sell the Blade LFP battery to Tesla. It's in the Model Y. So they are partners on some respect. They're on friendly terms, but they compete. But I would say in terms of advantages, I think they have the second largest battery business in the world. So they feed themselves. They're vertically integrated. They have a components business. I would say disadvantage wise is they have a challenge with automation. They have like 600,000 employees. They're not as automated as they probably should be. And then on the software and autonomy side, I know they're doing some partnerships, but I would say on the software side, even Mr. Wang has been on the record saying like, look, I don't think driverless cars are happening anytime soon. So I'm not sure that that's their strong suit as well. But they've raced to the top. Remember, the other thing too is they have 23 models, and even Stella Lee will tell you this, like only 10 or 15% of those models are actually overlapping to where Tesla sells models, both geographically and at a price point perspective. So they're not actually directly competing, in at the same price tiers. Now that's going to change probably over the next couple of years. Um, I think they're struggling coming into Europe. I think that's a difficult thing for them to do. They're trying to do an export business now. I think the EU is getting a little bit concerned. They're going to try to build a factory in Hungary, but they are going to expand. Here's what they're going to do. I think they're going to be a little bit complementary to Tesla. Like they're going to go expand in areas in Africa and parts of South America where Tesla isn't. Um, and and they're probably going to take a good amount of share doing that. But I would say on the software side, on the automation side, and even profit per vehicle, Tesla still has them, even as a U.S. company, they still have an advantage over them.
And so what's your like in three? I think their EV number is increasing, right? I mean, they suffered. The Q4 was bad for everybody, right? But like
Q1, yeah.
in terms of the volume sales, how do you see that going? I mean, over next 3 years, will they be able to beat Tesla around in EVs or?
Well, I think EVs are going to grow faster than any other segment in auto, and quite frankly, any other segment in tech outside of AI. You'll see you'll see that EV adoption curve growing. So there can be multiple winners. And Tesla doesn't need 100% market share. They don't need 50% market share globally. If they get somewhere, I think in the 15 to 25% range, that would be a huge dominant number from a market share perspective. But they don't need to own everything. They don't need to have all that market share. But EV, I think what will happen is 3 years from now, it will be Tesla and it will be one or more Chinese manufacturers, possibly Hyundai, out of Korea, that are global leaders in automobiles. It's not going to be GM, Ford. Toyota will still do it. Toyota has an amazing supply chain, but they are nowhere in EV right now. So that's going to be the challenge when this global kind of slowdown is behind us and rates come down. Are people going to be going up and scooping up these EVs, which Tesla's been grinding the cogs down? They've had price wars all over the globe, and EVs are going to be very attractive. They're going to be very attractive, and the charging networks are all ramping up too. So I think Toyota is going to be in a little bit of a trouble, but they're going to definitely be in that top five. I think there's like north of like, I don't know, 30 or 40 or maybe 50 auto manufacturers in the world. There's going to be like 10, a couple years from now. Just a lot of them are going to die off.
So what I'm hearing from you, Jeff, is that Tesla's main advantage over BYD is the software.
For sure, the autonomy side, and I would say the automation side as well, from a factory perspective.
Okay. Are you aware of Volkswagen making a pact with Xpeng because it seems there was a rumor Xpeng stole the facility, the FSD data from Tesla. There's some guy drifted to Xpeng and now Volkswagen is doing it. So Europe has a chance there.
Yeah, so I'm aware of some of these things, but all I will say is what Tesla is doing now with end-to-end neural nets, it cannot be stolen. So there's no software to steal. You can't get into Tesla's training side. Everything's highly secure. So FSD from version 10 from 2 years ago and version 11 from last year are completely, these were coded, these were heuristics in code. And now, 90% of that code is gone, and this is end-to-end neural nets, and they're not going to be able to steal that and just copy it.
This is a hypothetical question. I know BYD will have difficult time in US, right? I mean, the US government, if Trump comes in, I think it's a lot political also. But if BYD manages to come to US, will the whack Tesla out? Do you think like as the Japanese cars did with the other American cars like Ford and GM? Would that be a situation?
Yeah, so if China manufactures, so here's the thing with China. All the Chinese companies are not created equal. Some of them are highly automated and they're using casting structures and they're really taking their part count down. I think the story still needs to be told on Xiaomi and like how good this car is. Maybe a year from now, we should look back at it and do a retrospective. But obviously, it's a pretty highly automated process. And then you have the extreme on the other side, maybe like a BYD that isn't as highly automated. There's some automation. I'm not saying it's zero, but if you're not a highly automated factory and you're going to try to go from China to Europe or China to anywhere in the West, your cost structure is going to explode. The labor cost here is massive. So the unit economics don't necessarily work just because they're Chinese. There's no way that the US is going to allow stuff built in China to be imported, into the US. Just like China doesn't allow that today, unless there's a 17% VAT, plus there's other taxes that go on top of it. So unless they would have to highly automate their process all the way from the battery module all the way through the end of general assembly in the factory. And if they could export a highly automated manufacturing process, then they would have a chance in the US to do really well. But we don't know where their vehicles are from a safety perspective. We don't know where their vehicles are, from a lot of different regulations in the US. So there's some answers, but I'm not in the camp of it's like it's a never thing. It's certainly not anytime soon. And politically, the climate is not going to allow it because they would just literally they would not kill Tesla. They would kill GM, Ford, and all the local manufacturing here.
Two more questions before I leave you, Jeff. One is a pretty silly question, but I think I need to ask. I think Toyota's hydrogen initiative, and I listened to Elon's view on that. He thinks pretty stupid to even think about. Have you thought about it, or did it ever cross your mind?
Yeah, I don't understand how it scales. I don't understand where you store the tanks. I don't understand how safe it is. I just don't understand how it scales. And so maybe it's for larger industrial vehicles. I'm not sure. I just don't to me it hasn't risen to the level like I should really be spending a lot of time on it because I think it's got a lot of issues.
Okay. Last question. What will happen? When would you sell Tesla shares? What will shake you enough that you might just end up saying press sell button now?
Well, I think that question's different for everybody. I just want to be very clear, and I'm not giving any financial advice. I mean, I've been holding a lot of, I've been holding that. I bought the stock 11 years ago. So, and everybody does, some amount of trading or whatever. But what would make me sell it? Well, if the mission fundamentally changed dramatically, if Elon's not there, if they're not going after, accelerating, sustainable transport, if the mission changed meaningfully, then I would relook at it. Or if the management changed meaningfully, then I would relook at it. But you don't have to hold stock forever. You hold stock forever, you don't make any money. And it's not a bad thing if you've got to, find some liquidity at times for various things. But, I think Tesla has a lot more to run from where they are today. I can't guarantee it. No, there's no guarantees on anything. But yeah, I don't think now is the time. I think they've got kind of a long runway ahead of them for everything we've just discussed for the last hour.
For sure. Thanks, Jeff. I think that brings me to end. I think it's a company we can talk endlessly, but I think in the spirit of time, or we close it. But thank you once again. I learned so much new things, and I'm sure the viewers will. So
yeah,
happy voting.
Great to be with you. Thanks, Rajiv. Thanks, everyone.